JSE pairing losses on Friday, with global markets mixed as investors digested a mixed set of economic data in the US. For the week, the local bourse down 0.99%. Simon Brown of JustOneLap joins us now to dissect the latest market moves. Simon, good morning. All right, so give us from your perspective an overview on how the markets are faring so far this morning.
Morning, Mum. Yeah, as you said, after a lackluster week last week, we've opened up green. The overall market almost 0.2% higher. With all the indices in that range, the FINI 15, I suppose, is slightly ahead at 0.9. Industrial up 0.5%. The Resi 10 just over 0.5% higher. On the currency side, rand is stable, 18.78 against the US dollar. We've got 23.94 on the pound and 20.47 on the euro. Turning to commodities, gold a little weaker, $2,154. Brent 85.76, and PGM's green at 9.30 on platinum and 1,078 on the palladium price.
All right, let's go to Transaction Capital, and has a voluntary trading update in respect of We Buy Cars. And this is for the 5 months ending the 29th of February 2024. What's the latest there?
So it's actually not a bad set of numbers. Of course, they're starting the book build for We Buy Cars this week. In other words, private investors can invest into it, and then in a couple of weeks they'll also spin it out. So those who've got Transaction Capital shares will also receive some We Buy Cars. Numbers are good. We had seen an increase in sale throughput going through. That's still happening. Almost 14,000 cars in February. March has seen that continue. That after a fair bit of a slump at some point last year. And this is not so much because the consumer is suddenly robust and rushing out to buy cars. My sense is We Buy Cars is gaining market share, particularly off the independents, using their brand and also their formula, where they sort of come to you and will pay you for the vehicle. So not a bad trading update at all.
All right, well, let's go to education provider Stadio. Their results about the update now on the construction of its Durbanville campus is out. Talk us through those developments.
Yeah, results from Stadio. So we've got the free education on the JSE. Stadio is the standalone tertiary education. They also do a lot of distance learning. As you mentioned, they're building their campus in Durbanville. They've got other campuses out there. I like the business. The numbers are good. And I like the business. I mean, tertiary, our universities simply can't cope with that level of demand that we see. They've managed to really get well entrenched in the distance learning. Of course, big competitor there is UNISA, but it bodes well for them. And education, hugely important, and something which young kids going for tertiary or parents are more than happy to pay for if they can.
Yeah, that if is a big if. Well, MTN Rwanda results released for the year ended 31 December 2023. Those are also out. How have they fared?
Not a bad set of numbers. It's very small in MTN's life. It's 7.9 million users. MTN's approaching 250 million across their various different markets. So it is very small. We're seeing, as is usual across big uptick in data, and their money, their mobile money, the MOMO as they call it, is gaining some traction there. And interestingly, it's gaining traction beyond just the MTN user base as well. They're picking up folks who are not necessarily on the MTN network, but that is something which we've seen telcos the world over trying to find new areas of revenue, and banking or financial transacting certainly has been one of them.
All right, so let's round it off with the Financial Sector Conduct Authority. And they're investigating these allegations now that Old Mutual's independent financial advisory business, AdviceWorks' advisor acquisition model, is in breach of regulations. We know, Old Mutual's been in the news for a number of reasons, but what's going on with this?
Yeah, so this is unrelated to the social media storm that we've seen over the last couple of weeks around Old Mutual. What AdviceWorks does is it gives sign-on bonuses to new agents, to new financial advisors who join up. Now, that is in breach of industry practice, and the reason it's in breach is quite simple. What the worry is that your financial advisor moves to a new provider, in this case AdviceWorks, and then they tell you to basically reapply for all of your policies. In other words, we see a lot of churn, which hurts the investors, because of the fees in the process. So they are in breach, and short answer is this is one I don't expect them to win. This has been something which has been almost a decade fairly well entrenched in the industry, where you don't pay the sign-on bonuses to entice advisors to move across.
Yeah, that's a sticky one indeed. Simon Brown, thank you very much. JustOneLap founder, joining us there with a view of today's markets and some of the big movers and shakers when it comes to those numbers. So we'll chat again about our markets tomorrow morning.